We have Kunal Bothra along with Sandip Sabharwal joining us on the show. Good afternoon, gentlemen. Thank you so much for joining us. And Sandip, this is the penultimate day, a day before that we could get some announcement, a solid announcement on the reciprocal tariffs. How should one actually gauge this entire news event, and how should one actually position themselves, especially when it comes to the Indian markets?
I think hopefully this will be the liberation day from all the tariff talks, and markets will focus on fundamentals from there on. So I wouldn't be so worried. So I think India's external linkages are limited to the, like, in terms of our goods exports to the US are pretty limited. So I think there will be limited sectoral impact even if significant tariffs are put up. So I think the exact contours of everything we need to see. But there is unlikely to be any significant long-lasting impact of this news flow per se on Indian equities. Now, if the tariff was escalate, I think overall the risk assessment or risk in the overall markets goes up. So I think to that extent, the valuations which investors are willing to ascribe to risky assets like equities, that would come down. So I think that's a whole global risk which exists. But from the Indian perspective, the risk is limited.
Kunal, hi. What is your own take? Not just the weakness, but the way you sense dollars actually moving, because I think that's going to largely dictate which way flows do.
Yeah, absolutely, yes. And looking at so far the dollar index chart, it doesn't look very attractive as a chart. I think it's trading at 104 thereabouts, and we've seen the last 3 to 4 weeks, dollar index has fallen from 110 levels, but it still looks like that the index is looking out to be more on the weaker side, and we may probably drift lower, say closer to 102 or even 100 mark potentially. That could be a downside before we see any kind of a major water formation happening for the dollar index. And on the indices also, I think it's a natural reaction because of the way many of the global markets were panned out on Friday as well as on yesterday's trading session. I believe that once this news flow settles into, I think even if we come back to that 23,000 mark, which is the 50-day moving average, that would actually be a point where I would probably expect that the markets would become a lot more attractive yet again. So this 1800 point rally what we've seen, I think could get normalized once we dip closer to that 23,000 mark.
All right, that's about the market. Interestingly, today you have auto index that's under pressure, but two stocks actually saw a rebound from the day's lowest point. One of them is TVS Motor on back of better than expected numbers. Also, Ashok Leyland is the other one that actually saw a good uptick. Sandeep, what's your take on the auto pack? Because this is about the auto sales, but they're actually getting hit with what's likely to happen when you talk about the tariff front. Set aside that entire news flow, how should one actually play this theme, and should one play this theme at all?
I'm not sure how auto gets hit by the tariff theme because I think Indian exports of autos to the US are limited, and the potential of US exports to India of autos also remains limited. So I don't think it's a tariff story at all. I think a lot of panic was getting created by many analysts, etc., with regards to what numbers will come in from most of the auto companies in the month of March. Like you rightly said, the numbers which have come in till now, which include those of Eicher Motors, TVS, Ashok Leyland, and whichever companies have reported till now have been much above what the analysts were expecting. And autos tend to directly gain as the interest rate cycle moves down and liquidity improves. So I wouldn't be negative on autos. I think autos are reasonably well placed.
Vodafone Idea, let's talk about the star performer today in this kind of a weak market. And now that the government is going to convert that near about 37,000 crore dues into equity, that stock holding up quite well, even though it's come off a little bit from the top of the day. And other than that, of course, there is Indus Towers as well. Their main client, Vodafone Idea, they've managed to now secure financial support. So that stock also in tow with Vodafone Idea. Indus Towers will just come up for you on your screens. That's also holding up very smartly in trade. In fact, I think it's up almost 6.25% right now. Sandeep, does Vodafone Idea still remain just a trade stock, or is it still an avoid for you?
will remain avoid because it will never make a profit. So if it never makes a profit, then the value for equity shareholders has to be zero.
Okay, short and simple. It's a complete avoid on Vodafone Idea. Today, of course, what you're seeing is across the board weakness. IT once again getting hammered. In fact, IT has really been the one which has taken it on the chin ever since the tariff talks intensified. But today, HDFC Bank has cracked 3%. There's Reliance, which is down, and then ICICI Bank as well. Sandip, should the market fall further and maybe undo the rebound that we have seen since last month, would the buying list remain the same? And or do you think there will be a new set of names that you would be looking at?
No, nothing much has changed. The companies which are doing well and they will do well. So I think many of the large banks also will get benefit, like Axis, ICICI, HDFC, all of them. Kotak will benefit as IndusInd slows down growth and tries to adjust its balance sheet. And there's nothing negative per se for these. So I think many of these banks are also, if foreign investors flow dependent in terms of short-term moves, because the financials are the highest weighted in most indices. So I think foreign investor inflows and outflows tends to impact them in the short run. But longer run, they look good. L&T has been winning very significant orders, so I think that looks well placed. Some of the companies like M&M, Bharti Airtel, I think fundamentals remain strong. So I think a lot of large caps are reasonably valued and should do well.
If you look at the markets, yes, near the day's lowest point, with the IT index being under immense pressure in trade today. And that brings me to the next question, Kunal. What's in store for the IT sector when you talk about the charts, and also which stock right now do you think that one should chance their arm with?
So, I think it's a bit tricky because frankly, I would believe that the Nifty IT index would try and consolidate over here for at least a few more weeks. What's actually been happening for the IT index is, when you look at the last 1 month of performance, we made a base of 36,000 broadly for the IT index. We went up to almost 38,000, 37,800 for the index, and then now we are back again to the 36,000 odd mark, which means broadly this range of 2,000 points is acting as a trading range for the IT index. The indicators have started to increase. However, the prices are going to a retest of the lows, and typically when this happens, we expect the index to get into a time-wise consolidation. So there could be a mild drift on the downside for the IT index going forward, but I expect for the next say 3 to 4 weeks, or at least in the next 1 to 2 months, we may expect that the IT index could be a lot more range bound.
I want to bring up Oberoi Realty and Macrotech Developers, or LODA, given the weakness in LODA today. Now, this after Maharashtra has actually increased the ready reckoner rates, and the revised rates come into effect from today itself. Sandip, what does it mean for the realty plays, and especially the likes of an Oberoi Realty or a LODA, which have large dominance in the Maharashtra market?
I think the increase in ready reckoner rates is not so significant. I think it's in line with inflation. So I don't think that should be a big factor. I think the sector is correcting overall because there's an expectation that growth could slow down and pricing growth has already stalled. So I think that's what is possibly playing on the real estate stocks and could play out for the rest of the year also.
That's the take coming in the real estate space. Let's take a look at some of the counters that are actually moving in trade today on back of news flow. One of them being a trend. That one is actually seeing a good up move on back of the store additions. The portfolio has crossed about 1,000 stores. So on back of that, you have Trent that is holding on to good gains. Apart from that, take a look at Karur Vysya Bank. They've come out with their actually updates for the quarter, with the deposits and advances also gaining. So that's the stock that need to watch out for. Also paper stocks. Let's take a look at some of the paper counters. Remember that you have the ITC and Aditya Birla Real Estate a deal that has come about where you have the ITC that's actually acquired that pulp and paper business of Aditya Birla Real Estate, where now ABREL will now focus on their core segment, and that is the real estate. So let's take a look at some of the paper counters right now. You have the likes of Andhra Paper, you have Sheshashahi Paper, all of them actually seeing a good up move in trade today. Also, you have Nomura, which is saying that the deal valuation of 3,500 crore rupees is higher than the estimates of about 2,000 crore rupees. And Kunal, a space that we don't talk about much actually, that is the pulp and the paper business. What's your take on this? Have you actually seen any of these counters in the charts?
Yeah, I have looked at many of these names: West Coast Paper, JK Paper, Shai Paper, etc. Many of these stocks, they've gone through a very high beta correction in the last 6 months. So on an average, we look out for 20-25% kind of a correction to these spaces. But then now in this phase, we've seen many of these stocks correcting more than 30 to 35%. And interestingly, even in this month of this bounce in the market, we've not seen any major rally or a pickup of price trends for these stocks. Yes, these stocks have stopped falling, the volumes have started to improve, but the price rally into these stocks have been very, very tepid as compared to the different kind of mid-cap names which you've seen in the market rallying up more than 15 to 20% from their previous swing lows. So that indicates that maybe we could be in for more of a time-wise consolidation into the entire paper basket as such.
Okay, just looking at the texture of the market right now, while of course the pressure on the markets continues, and it seems like it's a very India-specific move after a long weekend that we're stepping back into trade because Europe is holding out quite okay. I want to just check in on what the US futures as well are, and they're flat right now. You're not really seeing any exaggerated moves. Europe, of course, is on a tear actually. 1.5% kind of moves to 1% pretty much across the board. The DAX is right now sitting on a 300-point gain. FTSE higher by nearly 1%, and similar is the movement on CAC as well. And even Asia, like we were earlier flagging off, that's managed to close in marginally higher for Shanghai, for Hong Kong. Japan is closed in flat. It's our market standalone that's, I guess, reacting to Friday's weakness in the US equities. Who knows what. But other than that, of course, there's Persistent, there's Naukri, Policy Bazaar, Voltas. All these stocks are taking a beating. Sandip, IT still remains an avoid, or do you think one can bottom fish now?
Largely avoid because of the fact that if the US economy slows down, which it should, then the entire discretionary spending uptick story also gets moderated. We all of us know the news flow of how AI is taking over some low-level coding, etc. So I think the business model is under some threat. The good part is that these companies still have significant cash flow generation. They still do buybacks, etc. But then at some stage, the correction will end. So I think let's wait and see the commentary post results, so most of the companies will report in 2 weeks from now, and we'll have more clarity. But I think definitely the pickup which had just started should again start moderating.
So that's the take coming in on the IT sector per se, given the fact that that one is actually losing quite a bit. You have a lot of brokerages come out with the preview of Q4 preview as well for IT, and they're not looking too enthused or too kicked about the quarter gone by for the IT sector as a whole. Kunal, let me come to you and let me get your view actually on the metal space, given the fact that of late we did see that bounce back in the metal sector. A lot of people were pinning hopes that maybe things will turn for the better, Chinese economy doing well, and also the way how the dollar index was performing. What's your take on metal sector in the charts?
Yeah, I'll be bullish on the metal sector overall at current levels also. I think JSW Steel has been doing fantastically well. I think even today, for example, the stock was perched at a fresh lifetime high or very close to that. I think by a margin of 0.5% or 1% is where the stock is off from its lifetime high levels. Compare that with a strong comeback which you've seen in SAIL Steel Authority. That's a stock which I think has formed a good base at sub 110 mark, closer to 110 or range for SAIL. Tata Steel has been one of the strong performers. I think the stock has made a very good comeback, 20% up from its previous swing lows of 120, 125 thereabouts. I think even at current levels of 150 plus, the stock still looks quite strong, consolidating at the 200 moving average. So when we look at the entire space on a relative strength basis, as well as on an individual basis within the entire sector, there are many stocks which have made a strong comeback. There are many of the stocks which are holding up their higher levels, they're consolidating at a higher point. And when we see these kind of patterns, that when stocks rise up higher and they consolidate and they don't give up their gains quite easily, even with a high beta sector like metals, that's strong indication that we are in for much more decent upside over the near to medium term. So bullish on the entire metal space and specifically the likes of JSW Steel, Tata Steel, as well as SAIL.
I want to see what Avenue Supermarts is up to today. The company has opened 10 new stores and their total, store count stands at about almost 412 stores now. Avenue Supermarts, not SAIL. That stock will just come up for you on your screens. Sandeep, just wanted to get your take in on Avenue versus, the QCOM space, Zomato, for instance, and this amidst reports that one is getting that they've let go of 600 employees from their customer support team amid the slowdown that they are seeing in food delivery. How would you stack up traditional retail versus QCOM?
So traditional retail has many companies. So I think on one side, your companies would fall into like V-Mart or companies like Aditya Birla Retail and Fashion, Trend, etc. in different segments. Avenue Supermarts versus the quick commerce, actually, there's no comparison per se because Avenue Supermarts is profit making. Those guys are still making losses and will increase the losses. But Avenue Supermarts standalone, a stock still trades at 80 times earnings. Earning growth should average 8 to 10% over the next few years. I think it's very, very highly valued. I don't think it should trade at such valuations.
On that note, we'll let you go. Good to have you on the show as always. Sandeep doesn't believe that it's fair value and finds Avenue Supermart expensive still. But Kunal,